So today we're going to be taking a look at some of the stocks that I sold recently and are planning to use that money to buy into some other stocks on my M1 Finance dividend investing portfolio. So without wasting too much time, let's just go ahead and jump onto the portfolio because I know that's what you guys want. So here we are on my screen. My name is Dividend Dennis on the portfolio. And we're currently sitting at about $4,200, not too shabby. I'm pretty excited. We have a little bit of a cash balance here, and that's mainly from new dividends that got paid out on the weekend. So I'm really excited. I'll show you guys here in just a moment. But as you can see here, I have two incoming transfers. I don't know why I did the two different ones. Sometimes I just get too excited, to be honest. And then here you're gonna see for upcoming trades, I have 26 buys and 2 sells. So currently, actually, just to show you guys and kind of give you a breakdown in case you haven't been on the channel before, currently I have 35 positions, so selling 2 is going to bring me down to 33. One mistake I was making early on with my investing strategy was I was overly investing into a bunch of different stocks, which pretty much means for me that I was not able to put as much money into all these individual stocks that I was buying. So I was making the conscious effort of starting to sell a lot of my positions in a ton of the different stocks that I had. It wasn't easy, honestly. Like, there was a lot of times I had to make really tough decisions on which ones I wanted to keep and in which portfolios, because as you can maybe jump on here and see, I have a couple different slices. I got 1, 2, 3, 4, 5, 6, 7 different actual sector slices. So for me in this portfolio, I didn't want to be overly saturated in one and very under represented in another. So I wanted to make sure each one had a healthy balance based off of what I kind of wanted it to be in my portfolio. But overall, it was, a process to go through and, remove a lot of these stocks. And I'm still kind of going through and removing some here and there, which we're going to be talking about the 2 that I'm selling today and maybe show you guys some of the ones that I sold earlier as well. And while we're going through this, if you aren't a M1 Finance user but are interested in getting started with it, I'll have a link for them in the show notes. You guys can check them out. Helps me continue to make free content for you guys. But what we're going to do is first and foremost take a look at our upcoming trades to see exactly what's going on here and to show you guys which stocks that I'm actually selling. So this trade is going to go in on Monday morning, and the sell is going to be for Disney and Colgate Palmolive Company right over here. So CL ticker number for that bottom one, and then Disney is DIS. So I had about $123.57 into Disney and then $88.12 into Colgate. Now, part of the reason I wanted to end up selling Disney was not just because they cut their dividend, which they did, but another thing that I wanted to do was when I was doing the research for it, I just didn't see a lot of the opportunity that I had with Disney versus a lot of the other stocks I had in a similar sector. So I'll go really quick and show you guys. So Disney was in my retail sector, and right over here I had Home Depot, Ross, Target, Costco, Starbucks, and then I did have Disney. And I just felt based off of the research I was doing with, the growth opportunities, with how all the balance sheets are, not that Disney is a bad company by no stretch. I just didn't think I wanted it in my portfolio at this time, and I'd rather invest in other companies, which are the ones that I have in here. But, to each their own, to each, whichever way you guys want to go, because I always like to tell people, hey, I am not your financial advisor, so always take these things as just more entertainment than they are any type of education. Because I do have tutorials on how to do stuff with M1 and other videos here on the channel, but this is strictly just me kind of sharing with you guys my investing journey. So now that we're back here on the upcoming trades, like I said, I got 26 buys. And if you're not too familiar, when I sell something from a selected pie, M1 Finance will take that money and dump it back into only the stocks that are in that pie as well. So you're going to see a couple big jumps here. So we got like Ross getting in $70. We got the Kraft Heinz getting about $39.46, which was from the Colgate amount. We got Hasbro getting $37.17. And then we got 3M getting $29.22, Procter & Gamble getting $23.18 or 87, sorry, and then Verizon getting $21.40, and then kind of trickling down here just a little bit with all the other ones. There are some that I did manually. If you saw here towards the top, the pending orders, Discover, Aflac, AbbVie, AT&T, and Realty Income, I did manual entries into these. I just have certain reasons why I wanted to invest in them. Dollar cost averaging is a big reason for that, but I didn't really want to change the percentage of their actual, pie structure. So I just manually invested in them, which is what I like to do to make sure that my money is going to the right places that I want it to go. And then the rest, I just let M1 Finance kind of do its thing, which is, investing into all these companies like Microsoft, Pepsi, Texas Instrument, Johnson & Johnson. All these companies are getting a little bit of their fair share. And that was like a big thing for me of selling a lot of these stocks, was going down to, like I said earlier, from 35 to 33. And even before that, I was up as high as 55 stocks, which I'll show you here in a sec. So if I go to activities and then I go to trading, let's see here. So on May 12th, I did one sell, which was from the FRT stock, which was a REIT. Then before that, on May 7th, I sold another two, which was McCormick and Company, and then Clorox. Clorox I partially did because their stock just went up crazy amounts. Well, not crazy amounts, but it went up enough to the point where I'd rather just take the profit and reinvest it in the companies I did have. And then May 4th, I cut 5 out, which was all my food restaurants. I got into them for a short time, and then I don't know, I just didn't really feel them too much as far as where I was trying to go with my overall portfolio for M1 Finance. I did have some of them also in my Robinhood account, just because I was kind of dabbling around. But I'm coming to find out that after investing for a while, you kind of start really finding where you want your money to be going and in which companies you want them to be going in. So that's a big thing. And then let me just make sure my camera screen is available to see this. So on the 27th of April, I actually did 14 sells. That sounds weird. So this one was a big one. This one I jumped down pretty immensely from where I was. That was my high point, I think, at the 55. So I sold out of Paycheck, UPS, Church and Dwight. I got out of 4, didn't really have anything in there too much to begin with. Chipotle, made some really good money on that. For the quantity, it was a good percentage, I should say. BBVA, Domino's Pizza, Amazon, Fifth Third Bank, Facebook, Google, Tesla. Don't worry about Tesla. So I do have Tesla in my Robinhood account. I was trying to build up a portfolio where I had at least one full share of Tesla, just slowly building it up over time. But I found out that with M1 Finance, it didn't really work very well, just because of what I'm trying to do is, build an income source in about like 5 to 10 years on this platform, so that way I can have that as just an extra resource for me. And as great as Tesla is, it really started kind of messing with my numbers and also my percentages. So sold them off again the second time actually, and also made a profit with that. And then I had PNC and then United Health Group. So I got rid of a ton of different stocks. So once Monday goes through and clears off Disney and CL, then I'm going to be down to that 33. And so that's going to help me out personally to, one, keep track of these stocks, because I got to make sure that I'm reading up on the news, looking at their numbers, just kind of seeing all their data points. Because if I come into the Seeking Alpha, which is what I like to use over here as an example, I can go to my portfolio here and I can see pretty much all of my stuff that I have. And so what I'll do from time to time, like for example, I can go to like Cisco, and then I can go into looking at a lot of their data points. Key data is really, really insightful when it comes to this. Again, this is just stuff that I started learning over time. I can look at their income statement. I can look at their balance sheet. I can look at a lot of different things that gives me some really good understanding of, hey, is the business going in the direction I would like it potentially to go as an investor? Should I keep investing money into it? I know sometimes for some people this might seem like a lot of information, and even for me personally, to be honest, it is. But I just try to get some really good ideas of like where they're going, where their actual like liabilities are, for example. I try to look at their cash flow because that's important. And then of course, like my personal favorite thing is also paying attention to like their dividends. I'm looking at their like dividend scorecard here, so I can see their yield. I can see their payout ratio, which is important to me. 5-year growth rate, which is important too, based off of where their dividend is. How long they've been paying dividends, and then when I can expect to get my payouts based off of like the ex-dividend dates and all that information. So that's just some of the stuff I do. And the more I keep having in my portfolio, the harder it gets to actually go through the process of making sure everything is right. So having around 30 to 33 so far is really going to help me in that process personally. But that's part of the reason I ended up selling out of so many of the different stocks that I had, just because of that reason. So, you know, if you got a lot of them, obviously it's always your prerogative to keep those. Just keep in mind that doing the research for this stuff can be a little bit more daunting when you have so many, if that is your kind of focus. If not, you should be definitely into something like this Vanguard fund. If you're not really wanting to do a lot of research. I like this fund. I have it mainly for my retirement account, but I also have it in here too, just to kind of keep me a little bit more secure in my overall fund account, because this is my fund account trying to build up a passive income for the future. Ideally, if I can get to $1,000 a month, that would be great. And that's kind of where I want to go with this one. So looking pretty good. Like I said, we're at 4,200. My goal sooner than later is to get to 10,000. I'm excited to try to hit that, because I think once we get to 10,000, it's just the ball's gonna really start rolling as far as having in growth, having income coming in from the dividends. Because I think right now, let me see, because I just sold stuff. So if I go in here, I can see what my dividend yield is across the board. So I actually recently just recorded another video, but with reselling the other stocks, or with selling the other stocks, my dividend yield is going to jump up to 3.164. And that has to do with the fact that the two stocks that I'm selling, one, Disney stopped their dividend, and they were only doing semi-annual. And then Colgate, their dividend yield was pretty low, but not the fact that it was low that really got to me. 2.55. Let's see here. Sorry, I'm like jumping screens here quickly. So if we go to CL's scorecard here, so they didn't have a low dividend yield. I mean, 2.55% is not great. Obviously, I'm usually looking around 3 to 4% is like ideal for me when it comes to that. And if it's anything less than 3%, where I really try to get at is the 5-year growth rate to be double digits. And this obviously didn't match up, because this is under 3%. The dividend growth is pretty abysmal in comparison to be able to have that number increase significantly for me, because I'm okay with a low dividend yield if the company has really good opportunity for growth and their dividend growth rate is pretty high up. So that's for me. I mean, that to me is just kind of like the biggest thing. But obviously they've been paying dividends for a while, and their payout ratio is a good rate, which is 60%. But again, that's just kind of my thing on it. If I go to Costco as an example here, just to kind of help give some perspective on this. So Costco pays a really low dividend yield, but their growth overall in the stock has been obviously really nice. And then their 5-year growth rate is 14.52%. So that means my money is growing pretty extensively every single year, even if I don't buy any more into the stock. And then their payout ratio is much lower, which gives me more security in the fact that they are going to be paying out that dividend. Obviously, you know, that's up to each person and your preference, whether you want to save your dividends at a higher percentage and then not have a lot of growth long term. It's all a matter of like preferences, like I said. And I think one thing I really want to stress out as well too is if you're watching and you have a significantly less amount in your portfolio than I do, I want you to keep this in mind, and I'm going to show you here too. And I've showed this a couple of times because I think it's important. I started off this account with $100. Right over here, you can see deposit $100. And then if I go back to my main screen here, you'll see here on this chart, I barely had anything invested for a long time, and I was doing such small amounts every single month until I got a little bit of consistency, a lot more encouragement, a lot more educated on the process. And then as I started going through, I started investing more and more, and you can see the overall value. Now, partly because of everything going on in the market, I decided to go ahead and actually invest a lot more over the course of a couple of months, but I definitely wouldn't have been here, I don't think, if I wasn't already investing and or putting in small dollar amounts every single month or week, however works best for you. So whether you started with M1 Finance with $100 or any other platform, you know, I encourage you to keep doing those little investments, because those are honestly going to go the long way for you, because then over time you should just start investing more and more and get excited, you know, get encouraged, learn more, learn the lingo, because even I learn the lingo from time to time, and trying to figure things out as I go as well. I'm just the person here sharing with you guys my personal journey, because I hope that my journey gets you excited for your investing journey and to continue going through that path. If you want to check out M1 Finance, I'll have them in the show notes down below. I encourage you to get started with investing if you can. Even $100 will get you started, and then you just keep moving forward from that point on. Now, I want you to keep on watching and learning with investing videos, so check out my content right over here. My name is Dennis, and I will see you in that next video.